All right, let's just dive right into this explainer. Today, we're breaking down the absolute fundamentals of an absolute giant, the PNC Financial Services Group. With over $550 billion in assets, it is one of America's largest regional banks. And man, lately, it has been making some serious headlines. We're going to unpack exactly why that is. And we'll use the data to see if all this recent bullish sentiment is actually justified. Now, before we get into the really fun stuff, the numbers, a quick but super important disclaimer. This explainer is strictly for informational and educational purposes. It's not financial advice. All investment decisions carry inherent risks, right? So always consult with a qualified financial advisor. Also, keep in mind, the data we're looking at today reflects information available as of August 27th, 2026. Okay, here's our roadmap for today. We'll be covering 1. The PNC stock momentum. 2. The record Q2 earnings. 3. The FirstBank acquisition. 4. Raised guidance. 5. Analyst consensus. And 6. Key risks to consider. Section 1. The PNC stock momentum, riding the 52-week high. To really wrap our heads around this current momentum, we kind of have to look at the sheer scale of this thing. PNC boasts a massive market cap of roughly $97.6 billion. But despite that huge size, it's trading at a price-to-earnings ratio of just 13.5. That means investors are paying a relatively modest multiple for every dollar of profit when you compare it to historical averages. And as of August 27th, 2026, the stock is trading right around $240, having just pulled back from a massive new 52-week peak. And that 52-week high? Well, it's part of a much, much larger story. It represented a dramatic 31.4% rally over the past year. But get this, even more incredibly, nearly 20% of that gain happened just over the past 3 months. I mean, when a massive financial institution rallies that hard in one single quarter, we really have to ask, what is driving this intense momentum? Moving to Section 2, Record Q2 Earnings Breakdown, let's look at those organic growth drivers. So what's actually fueling this rally? Well, it's the Q2 earnings report that dropped on July 15th. The headline number here is absolutely massive, $6.88 billion. That is record quarterly revenue for the bank. Net income came in at an incredible $2.1 billion, or $4.81 per diluted share. That completely crushed Wall Street estimates, which were sitting way down at $44.47. Just look at this. Comparing Q2 of 2025 to Q2 of 2026, we are staring at a staggering 21.4% year-over-year revenue jump. To see that kind of growth in a mature regional bank, it's practically unheard of. And while the market showed just a tiny bit of volatility on earnings day, investors have now clearly, fully recognized the underlying strength of these numbers. Let's unpack what actually drove this. First, net interest income surged 16% to $4.11 billion. That's largely because fixed-rate asset repricing added about 120 basis points in yield, which essentially just means they're earning a higher interest rate on their assets. Second, fee income jumped 31.4%, and this was driven by a massive 80% surge in capital markets and advisory revenue. This right here proves PNC is successfully diversifying way beyond just traditional lending. Finally, average commercial loans were up a very healthy 13%. All right, Section 3, the FirstBank acquisition impact, expanding the footprint. While the organic growth was great, the real game-changing catalyst for 2026 was inorganic. Back in January, PNC completed a massive $4.1 billion acquisition of FirstBank. Just look at what they scooped up. $26 billion in total assets, $16 billion in loans, and a highly lucrative $23 billion in deposits. Morningstar actually noted that this gives PNC the number 2 deposit market share in the highly valuable Denver market, along with some major expansion down in Arizona. But, having a good strategy on paper is one thing, execution is another. And PNC's execution here was practically flawless. By June 22nd, they had seamlessly migrated 780,000 customers, over 1,600 employees, and 95 branches straight over to the PNC brand. Because of this incredibly smooth integration, management is actually expecting this single deal to add nearly an extra $1 per share in earnings by 2027. Which brings us to Section 4, raised guidance and dividends. Let's talk about rewarding shareholders.
Strong results naturally breed forward-looking confidence. Following Q2, management actually raised their full-year outlook not once but twice. They bumped expected loan growth up to 12.5% and net interest income growth up to somewhere between 15% and 15.5%. Because of this, they expect their net interest margin, which is just the core difference between what they earn on loans and what they pay out on deposits, to hit roughly 3.00% by the end of 2026. And here is the direct payoff for you as a potential shareholder. Right after the Federal Reserve stress test in June, PNC announced a massive 18% increase to their quarterly dividend. They raised it by 30 cents to a full $2 per share. At the current share price, that yields a really attractive 3.3%. This sends a clear, undeniable signal of extreme management confidence in the bank's financial fortress. Section 5. Analyst Consensus and Targets. What is Wall Street's verdict? We've seen the internal data, but what are the experts actually saying? Well, out of 22 analysts currently covering PNC at firms like MarketBeat and S&P Global, the sentiment is overwhelmingly bullish. We have 18 rating it a buy, 4 rating it a hold, and absolutely 0 rating it a sell. Literally 0. Institutional investors are clearly seeing the exact same thing. In the second quarter alone, Legal & General Group poured a new $669 million investment directly into the bank. Let's look at the specific price targets, because we've seen some major recent upgrades. Barclays raised their target to $284, Oppenheimer to $281, and Robert W. Baird to $280. When you average out all 22 analysts, the target sits between $265 and $278. That implies an 8% to 16% upside from the current $240 price, with the absolute highest target sitting all the way up at $290.
Finally, Section 6, Key Risks to Consider. Time for the reality check.
Every single investment thesis, no matter how good it looks, needs a reality check because no investment is without risk. So here's the core debate you have to have with yourself. You've got to balance this aggressive upside potential, that 8% to 16% growth getting us to the $278 target range, against the looming macroeconomic shadows and, frankly, the internal costs of running a growing banking empire. Let's detail these primary risks clearly. First off, broader economic uncertainty. Morningstar noted recent softness in the U.S. labor market, which could lower loan demand. Second, elevated expenses. PNC is pouring a massive $2 billion into branch expansion and technology upgrades through 2029. While that's great for the long term, it is absolutely going to pressure short-term margins. Third, valuation. With the stock up over 30% in a year, you really have to ask if all the good news is already priced in. And lastly, interest rate sensitivity. Any shift in Fed policy could rapidly impact bank profitability. Which brings us to the ultimate question I want to leave you with today. Does PNC's record growth story, their perfectly executed acquisitions and rising dividends outshine the broader macroeconomic risks and expense pressures? The bull case shows incredible momentum and huge Wall Street confidence, but the bear case reminds us of the fragility of the broader economy. I encourage you to take this structured breakdown, do your own deeper research, and decide where you stand. Thanks for joining me on this explainer, and keep learning.